Preparing for an ADCB, Abu Dhabi Commercial Bank, interview questions interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work for ADCB? ADCB appeals to me because it combines a strong UAE franchise with a clear focus on customer experience, digital banking, and disciplined risk management. I would position my answer around 3 points: the bank's reputation in Abu Dhabi, its broad retail and corporate platform, and my ability to contribute through analytical accuracy, client service, and compliance mindset. I would also connect my motivation to the specific role, not give a generic large bank answer. While answering, focus on ADCB's UAE franchise, customer-centric banking model, digital transformation, risk discipline, and how your skills align with the specific role, rather than giving a generic banking answer. Question 2. Tell me about yourself and why you are suitable for this banking role. My background is strongest where finance, controls, and client service meet. I would summarize my education or experience briefly, then highlight examples relevant to ADCB, handling numbers accurately, working with customers or stakeholders, meeting deadlines, and following procedures. I would not list my CV line by line. I would finish by explaining why the role is a logical next step and how I can add value quickly in a regulated bank environment. Make sure to cover your education or experience briefly, then link your strengths to banking, accuracy, customer handling, confidentiality, teamwork, deadlines, compliance awareness, and commercial judgment. Question 3. What are the main products and services offered by a bank like ADCB? A bank like ADCB serves both individuals and businesses. On the retail side, key products include current and savings accounts, personal loans, mortgages, credit cards, auto loans, and digital banking services. On the corporate side, the bank offers working capital finance, trade finance, cash management, treasury solutions, and relationship banking. Revenue comes mainly from net interest income on lending and deposits, plus fees from cards, transactions, wealth products, and advisory services. In your answer, talk about retail banking, corporate banking, deposits, loans, cards, wealth management, trade finance, treasury, digital channels, and how these products generate fee income and interest income. Question 4. Why are CASA deposits important for a commercial bank? CASA means current account and savings account deposits. These are valuable because they usually provide cheaper funding than fixed deposits or wholesale borrowing. If a bank can attract stable CASA balances, it can lend at competitive rates while protecting its net interest margin. CASA also deepens customer relationships because salary accounts, business accounts, cards, loans, and digital usage often sit around the same relationship. For ADCB, strong deposits support liquidity and profitable balance sheet growth. Be sure to mention current and savings accounts, low-cost funding, net interest margin, liquidity stability, customer relationships, cross-selling potential, and why banks focus heavily on deposit acquisition. Question 5. How would you assess whether a customer is eligible for a loan? I would assess both willingness and ability to repay. For an individual, I would review income, employment stability, existing liabilities, credit bureau history, debt burden ratio, and required documents. For a business, I would look at financial statements, cash flows, bank statements, industry risk, collateral, and management quality. The final recommendation should follow ADCB's credit policy, not personal judgment alone. A good loan is not just approved, it is affordable and sustainable. While answering, focus on income stability, repayment capacity, debt burden ratio, credit history, employment or business profile, collateral where relevant, documentation quality, and compliance with bank policy. Question 6. What is International Financial Reporting Standards 9, expected credit loss, and why does it matter to banks? International Financial Reporting Standards 9 requires banks to recognize credit losses based on expected loss, not only when a default has already occurred. Loans are usually grouped into Stage 1, Stage 2, or Stage 3, depending on credit deterioration. The expected credit loss considers probability of default, exposure at default, loss given default, and forward-looking economic factors. This matters because provisioning directly affects profit, capital strength, and how management monitors the quality of the loan portfolio. Make sure to explain expected credit loss, forward-looking provisioning, Stage 1, Stage 2, Stage 3 classification, probability of default, loss given default, and impact on profitability. Question 7. What do KYC and AML mean in day-to-day banking? KYC is about knowing who the customer is, what they do, where funds come from, and whether their activity makes sense. AML is the broader process of preventing the bank from being used for money laundering, terrorism financing, sanctions breaches, or fraud. In practice, that means verifying documents, identifying beneficial owners, screening names, monitoring transactions, and escalating suspicious activity. I would treat KYC as a core control, not just an account opening formality. In your answer, talk about customer identification, beneficial ownership, source of funds, transaction monitoring, sanctions screening, suspicious activity escalation, regulatory expectations, and the importance of protecting the bank's reputation. Question 8. How would you handle an angry customer in an ADCB branch or contact center? First, I would stay calm and let the customer explain the issue without interruption. Then I would acknowledge the concern, verify the customer properly, and check the facts before promising anything. If the issue can be resolved within my authority, I would explain the solution and timeline clearly. If not, I would escalate through the proper channel and document the complaint. The key is empathy with control. Solve the problem without bypassing policy or confidentiality. Be sure to mention active listening, empathy, verification, staying calm, understanding the issue, explaining options clearly, following escalation procedures, documenting the complaint, and protecting confidential information. Question 9. How do you balance sales targets with responsible banking and compliance? Sales targets matter, but they cannot override suitability and compliance. I would start by understanding the customer's need, financial position, and risk profile, then recommend only products that genuinely fit. I would explain pricing, fees, obligations, and key risks clearly, especially for loans, cards, and investment products. Short-term mis-selling damages trust, complaints, and regulatory standing. Responsible sales create repeat business, referrals, and stronger long-term revenue for the bank. While answering, focus on ethical selling, suitability, product knowledge, customer needs, disclosure of fees and risks, regulatory compliance, long-term relationships, and avoiding mis-selling pressure. Question 10. If you are reviewing a corporate client, which financial statements would you analyze first? I would not rely on one statement alone. The income statement shows profitability and margins, the balance sheet shows leverage and liquidity, and the cash flow statement tells me whether profits are converting into cash. For a borrowing client, I would focus heavily on operating cash flow, working capital movement, debt levels, and interest coverage. I would also compare audited financials with bank statements and management explanations, because repayment comes from cash, not accounting profit. Make sure to cover income statement, balance sheet, cash flow statement, working capital, leverage, profitability, liquidity, debt service capacity, and the need to compare numbers with bank statements. Question 11. How do rising interest rates affect a bank like ADCB? Rising rates can help a bank if loan yields reprice faster than deposit costs, improving net interest margin. But the benefit is not automatic. Higher rates also increase customer repayment burdens, which can raise credit risk, especially for highly leveraged borrowers. Deposit competition may push funding costs higher, and treasury portfolios can face mark-to-market pressure. The real answer depends on asset liability management, repricing gaps, duration, deposit mix, and the quality of the loan book. In your answer, talk about loan yields, deposit costs, net interest margin, customer affordability, credit risk, treasury portfolios, floating rate assets, and the importance of asset liability management. Question 12. What role does digital banking play in ADCB's growth strategy? Digital banking is no longer just a convenience channel. It is central to customer acquisition, service quality, and efficiency. For ADCB, Strong mobile and online platforms can reduce branch dependency, speed up transactions, improve onboarding, and create better data for personalized offers. It also lowers cost to serve over time. The risk side matters too. Cybersecurity, fraud monitoring, and data privacy must keep pace with digital growth. Good digital banking combines speed, trust, and control. Be sure to mention customer convenience, mobile banking, straight-through processing, lower cost to serve, data analytics, cybersecurity, operational efficiency, and how digital adoption supports cross-selling and retention. Question 13. What is operational risk, and can you give a banking example? Operational risk is the risk of loss from failed processes, people, systems, or external events. A simple example is processing a transfer to the wrong beneficiary because maker-checker controls were not followed. Other examples include system downtime, fraud, cyber incidents, missing loan documents, or incorrect fee charging. Banks reduce this risk through segregation of duties, reconciliations, access controls, staff training, incident reporting, and strong audit trails. While answering, focus on failures from people, processes, systems, or external events. Include examples like wrong transfers, fraud, system outages, documentation errors, and controls to reduce losses. Question 14. Describe a time you worked under pressure and maintained accuracy. I would answer this using a short star structure. For example, during a month-end deadline, I had to complete reconciliations while handling urgent stakeholder queries. I prioritized high-risk items first, used a checklist, kept supporting evidence organized, and communicated early where I needed clarification. Before submission, I performed a final reasonableness check. The result was timely completion with no material errors. The message for ADCB is that I do not sacrifice accuracy under pressure. Make sure to use a structured star format: situation, task, action, result. Highlight prioritization, checking controls, communication, deadline management, and a measurable or credible outcome. Question 15. If you noticed a colleague bypassing a control to help a customer faster, what would you do? Speed is important, but controls exist to protect the customer, the colleague, and the bank. If I noticed a control being bypassed, I would first assess whether there is immediate risk, then speak to the colleague professionally and remind them of the required process. If the issue continued or involved serious risk, I would escalate to the supervisor or compliance channel. I would avoid confrontation, but I would not ignore it. In banking, control discipline is non-negotiable. In your answer, talk about professionalism, immediate risk assessment, not accusing publicly, reminding the colleague of policy, escalating if needed, protecting the customer, and documenting through proper channels. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.